Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 24th of July. All right, now, as we come into this start of the week, the Asian session here. Now, the news services, no major news over the weekend that I can really pinpoint. So they are focusing on like the back end of the week, okay? Yen slides, dollar gains as BOJ seen maintaining loose policy. Well, the BOJ rate decision is until Friday. So there's a few things. You can get up to speed here with what's happened across the board. Obviously, Canadian retail sales figures, UK inflation data, all the bits and pieces from last week. Now, we do have some key, this is going to be a really busy week, right? We've got the Fed interest rate decision, the ECB rate decision as well. BOJ at the end of the week, I don't really expect anything from the BOJ, but the Fed and the ECB, one after the other, a day apart, gives us plenty of time to work out what the strategy is going forward. Now, I'll cover that in a second, but just having a look at the charts here, right? Now, last week, actually, if I just come over here to the currencies, this is where the action came from, right? So we saw UK inflation numbers came out really or below the range, right? So weaker numbers, still quite high, 6.9% year on year. Whereas, but the good thing is it was at 10% like probably a couple of months ago. So the interest rate hikes in the UK are having a compounding impact, and we are seeing things stall very quickly. Now, that's sort of good as far as the housing, people who've got mortgages in the UK. But what does it do for us? Now, that whole weaker UK story gave the dollar a little bit of a pep up to the top side, right? And we did see a couple of US numbers, retail sales figures came out sort of not like crazy solid, but better, not weak, put it that way. So the dollar made a little bit of a recovery, right? You see that. And funnily enough, the dollar index and dollar yen trading or correlating extremely high. You saw a bit of a relief rally here on dollar Swiss. Now, don't get me wrong, right? The US dollar has rallied because generally of other currency weakness. I still think the US dollar is in a bit of a downtrend, but we are losing the shine from that clear direction on the dollar primarily because of the UK CPI numbers. And now the rest of the other currencies get to sort of have a bit of a play. Now, the oil, well, it's back at 76.60. And dollar CAD's just slightly rallying, right? That slight dollar, a little bit tricky here once again, obviously for the loonie, but this is where the action will be this week. A lot of action on euro. Okay, of course, the Fed Wednesday, ECB Thursday. It's all related to the euro. So we have seen a bit of a relief sort of dip here. Okay, it's not like euro is going down. Once again, it's been dragged down by, I guess you could call it its cousin, its close cousin, its close neighbor, sterling. And that's sort of drifted across onto Aussie and Kiwi. All right. Now, Aussie, we saw some really good employment numbers, but I'll tell you what, that's the thing with the Aussie and Kiwi. Once the numbers are out, it will follow suit with what's happening on the euro and sterling. And it's great to have sterling back in the game 100%, right? For some time, inflation was either here nor there or just going up. But now we've got all the economic indicators in the UK, inflation, retail sales, all the other components sort of working together to give us a really clear direction on what's happening in the UK economy. And we can work out whether to buy or sell sterling. So there's plenty going on now. As we come in closer towards the Fed and the ECB, you're going to see some squaring up. Now, the dollar index almost back at mid-range. That's going to create a fair bit of uncertainty here around euro in particular. We do have some trend lines here, as you can see, that the other currencies are sort of banging around. Kiwi sort of just broken straight down. Dollar CAD mid-range. We've got a nice resistance line here on dollar Swiss. You'd expect some stop losses just above that resistance line. And dollar yen, well, since the BOJ started talking it up, they were focusing on 145 as the big, the potential intervention level for the BOJ. Well, I tell you what, if the dollar rallies here, we'll be back at that level very quickly. So that's where we are on the currencies. Now, this week also, we're going to see a fair bit of activity on the equity markets, particularly the US equity markets. Okay, they've had a really good run. The NASDAQ sort of the one with all the AI cash going into AI stocks. That's really pepped things up. But what are the Fed going to do? Now, the Fed are due to raise interest rates on Wednesday by 0.25. That's factored in. But what they say about afterwards is where the action's going to be, right? It's probably a good time for me to bring you back across, and we'll just go through the various components here, because there's a fair bit of activity going on. Now, Monday, keep an eye on the German manufacturing data. I think there's some services data there as well. Now, there are some EU numbers there as well, but I tell you what, the German numbers are the key to Europe, right? So Euro, the key on Monday. Tuesday, we get the German IFO data. Okay, business climate, consumer confidence. So that's not a bad number to look at. It's a nice, easy trade. I remember trading this in the late 90s in London, and it was just like there's no crazy volatility. The number comes out, and if it's weak, it just sort of drifts lower, or stronger, it just drifts higher. It's sort of an easier trade. US consumer confidence numbers, well, gives us a bit of a look how things are set up ahead of the Fed, right? Now, Wednesday, the Aussie inflation numbers, US, but the key to the whole week, really, if you had to pick one event, okay, it would be the Fed, followed closely by Thursday's the EU interest rate decision there as well, right? So these two events, huge. They have repercussions, obviously, for Euro, but all the US dollar-based currencies and equity, US equities. And you can put into that global equities, right? Whatever happens usually on the US equities happens across the board. So Monday, you'll see here most of the week, this is what I was coming to when I was looking at the charts. Euro, obviously the US dollar and US equities. These are in play pretty much every day, right? So it's a big week for Euro. It's a big week for the dollar, obviously, and US equities. Then you've got a few days where we've got a few other bits and pieces like the Aussie. Of course, that'll be in play with the Aussie inflation numbers. But you know what? It'll pay dividends to really focus on the Euro and the Euro crosses, and obviously the major currency pairs, as well as the other dollar pairs as well. Then when you come into Friday's trading, now the BOJ rate decision, okay, I don't expect anything there. But with the BOJ talking around various, they don't like the yen weakness and all this sort of crap, that may come into play. It really depends come Friday. Is dollar yen up around 145 or above or lower, right? That may have some sort of bearing on what the BOJ do. German inflation numbers, the prelim numbers, always a good look. CAD GDP, well, it's almost time for the GDP numbers to start sort of giving us some answers as to what's going on in the whole economy. At the moment, it's still inflation and employment, which is the key to it. But the CAD GDP, it's worth a look. And the PCE price index, right? The last, sort of inflation number before next week's non-farm payrolls. All right. So pretty much there's bits and pieces coming out across all sessions here, but I've focused on the high impacting, medium, and sort of, second to third tier numbers. That's where the major activity will come from. Okay. So if I just come back and let me just get off that page. So when you are sort of focusing across the various events, right, you just need to be focusing on what the consensus is. Obviously, you come down here to get into Wednesday, you got the inflation numbers there, but as I said, the Fed interest rate decision will be the key event. And if I can just find my little bits and pieces here. Here we go. Sorry about that. Okay, so 0.25% factored in. This makes the US press conference, okay, following half an hour later after the interest rate decision, very important, right? Now, the Fed are going to want to make it very clear exactly what the plan is from here, right? And we've seen numbers rolling over. So we're going to see if they're going to maintain that aggressive tone, or if they dial it back a bit. I'd say right now, and it's a little bit early to be saying a few or 2 or 3 days out, but they're going to probably keep their foot on the throat, so to speak. Okay, that's great. Inflation's coming lower. Recognize that, but we will make decisions based on the economic numbers, right? It gives them room to move. And what they don't want to do is like what the Bank of England did some couple of months ago, is saying, look, looks like inflation's topped out. And that's it, right? And then all the consumers just started loading up on loans again. Spending went through the roof. They don't want to do that. That's not what they're trying to do with these interest rate hikes. So, and then you come down into the ECB. Okay, so once again, very important here. Once again, the press conference, the coming out 45 minutes later. Is it 45 or 15? It's around there somewhere. So that's going to be very important as well. Coming into Thursday's trading, you've got 0.25% factored in. So just bear that in mind. And that's once again where the press conference comes into play. So just for those traders who are new to us, the interest rate decision, you'll get the statement from the central banks at the same time. The press conference is a different event. All right. So you need to sort of be paying attention. The funny thing is with Thursday's trading is we've got a bunch of big or decent sized US numbers coming out at the same time, right? You've got the ECB, and then you've got some GDP durable goods. You've got the press conference down here as well. And then you've got the jobless claims numbers squeezed in here as well. And we did see like a $10,000 variance last week was enough to give the dollar some sort of movement. I think that's because the market was starved of US data. But Thursday is definitely a huge day. Like if you combine Wednesday, Thursday, you're going to have a lot of answers. Now, are those answers going to be good for us to trade? Well, you don't know until the events, until we get closer, right? I'll be covering the trading opportunities around the various days leading into these events, where the best technical setups are. And hopefully if we can get clear answers from the central banks, and we don't always get that, then we may have some solutions as to what's going on. And there's on Friday, the BOJ interest rate decision. As I said, I don't expect any sort of changes there, but you know what? It gives them a chance to let the market know what they're thinking. There are a bunch of other peripheral numbers, like to say pending home sales figures on Thursday in the US, following the ECB and all the other data. Like Thursday, there's a load of US numbers, right? So Wednesday, the Fed, load of US numbers Thursday, and then the ECB mixed in there amongst it. So you've got a lot of things to decipher. And one thing that we will be focusing on very closely is what instruments do we trade, right? So when you've got so much US data coming out, it can sometimes cloud, where the best trading opportunities are. We should hopefully have a good answer here from the ECB as to what is going to happen on Euro. And then Thursday, if all those numbers out of the States are weak, well, we're going to have some answers there as well. But we will also know what the Federal Reserve is thinking from Wednesday. All right. So anyway, there's so much an abundance of big activities, second tier, third tier data this week that you really want to be paying attention. There's no need to rush into the trading opportunities as they are released, right? You can come unstuck. The way I'll be sort of approaching this is maybe get a little bit of cash on board earlier in the week. Okay. So to me, that's a smaller trading opportunity. As we come in towards closer to the bigger events, if we see some direction here from, say, the German IFO business numbers, well, then that's a great lead in for Euro. You come into Wednesday, the Aussie inflation numbers are obviously very important for what the RBA is going to do, but this is like a bit of a precursor to the main event, which is obviously the Federal Reserve, and we're going to see exactly what's going on. We've got the Bank of Canada summary of deliberations there as well. This sets the tone for the global markets, equities, and the dollar. And then once we have the answers, we can pick things off with regards what the ECB do and all the US numbers, right? The actual US numbers coming out after the Fed is really good because the Fed tells us what the plan is, and then we can work out if these numbers are fitting in with the plan or not. If they fit in with the plan, we start to see the dollar trend. If they don't, we see some discombobulation and potential sort of more shorter term trades, I guess. All right. Hopefully I haven't confused you too much, guys, but basically there's a huge amount of data coming out. You want to take the time to get your charts up to speed, and then you can really work out, looking short term, which is what these charts are on the hourlies, go through your longer term charts, see exactly where the trends are for these instruments. To me, the US dollar itself is still in a downtrend, but it has stalled for the moment. If I just shrink up the dollar index, okay, you can see, get a much better view of what the dollar's doing. So don't get fooled. This little pop-up, as I said, based off the weaker UK numbers last week, isn't like the dollar's recovering, right? It has to get above these trend lines to be back in an uptrend, and that's where the Fed comes into play this week. All right, guys, all the best. Good luck. Cheerio.